Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and the beginning for the week this Monday uh, morning as I speak to you has started off on a slightly flat to positive note. Both the frontline indices Sensex and Nifty are trading with double digit gains as I speak to you. Nifty Bank trading with a double digit loss. Levels to mention on the Sensex, close to 61,300 on the Sensex, near about 18,300 on the Nifty Spot, and double digit loss on Nifty Bank, trading at 38,300 or thereabouts approximately. I guess market after last week's rally are taking a breather. Consolidation, as I mentioned earlier, is always better for the market, gives an opportunity to rethink the strategies that one has in mind. And of course, the earning season that has been kicked off for this financial year, third quarter, whatever we've seen up till now, has been either in line or minor misses as far as some of the names in the IT universe are concerned. But we can take that as one of long-term growth story for the IT sector remains to be intact and very strong, especially post the verbatim of the management uh, after third quarter earnings that we witnessed. On the other side, the currency is trading at somewhere around rupees trading at somewhere around 74.32 rupees to a dollar, with some marginal losses. Not to forget, we did see the strength in the rupee sub 74 levels against the dollar, and then a little bit of buying activity in dollars. That is what has led to a little bit of weakness as far as the rupee is concerned. Energy basket, however, has once again fired up. Brent is at about $86.26 a barrel, and NYMEX is trading at about $84.21 a barrel. Again, one needs to be a little bit patient as far as the energy basket is concerned to figure out how the demand shapes up in the coming future. And as we see the harsh winter passing by, the demand should subside to a certain extent. And of course, the strategy from the OPEC plus nation as far as the output of crude oil is concerned remains to be seen. But overall, friends, my sense is that we are slowly and steadily again going back to those levels that we've seen on the higher side. It won't be a one-way move. There will be days of consolidation like today, maybe days of profit booking that we may witness. But after the recovery that we've seen post the lows that we saw way back in not very long back, I think it was 20th of December 2021, wherein the Sensex touched a low of 55,800 and the Nifty touched a low of 16,600 or thereabouts. So from those levels, we have not even completed a month, but we have recouped quite a bit of lost ground, and I think that's something to look upon. And after this kind of recovery, it is always better to see some kind of consolidation. On the news front, well, the number of patients, new, people falling sick are at a higher level, but at the same time, this variant is not as severe as what we have seen, and the reports also tell us that. And the view is that if this is the case, then I think as we reach the peak date and the flattening of curve, I think there should be renewed activity in the market. News flow from the global front is something that we'll have to watch out for. Sectorally, if you recollect, I had mentioned about IT and auto, and today, out of the 5 leading stocks, top gainers, 3 are auto stocks. And there is one more circular that is out from the government side to make the vehicle much more safer, is to have 6 airbags for capacity vehicles having capacity of 8 passengers and more. I guess this only augurs well. It's rather to be in a safe vehicle than made to crumple, which may lead to great eventualities which we don't want to foresee. Undoubtedly, the cost of vehicle will go up as the customers will have to pay a little bit of higher price. So what my intention is to, as autos recover, we should also look at auto ancillary, especially the ones which are into making components that make a vehicle safer, like airbags, ABS, etc., etc. Those companies will do well, and the sense is that recovery in auto sector will translate into recovery in battery manufacturing companies, tire manufacturing companies, OEM, that is original equipment manufacturing companies. All these companies will do well as orders will up. And the fact of the matter is, in the month of January 2022, what I am given to understand and a report told me is that there are close to about 6 launches in different categories that we are going to witness in the passenger vehicle segment. So if that's the kind of demand, I think you should definitely have auto and ancillary companies on the radar. Uh, Overall, flat to positive market, but remain positive. Buy on non-dips is something that we have always suggested, and this should be your strategy, starting with the sectors that have been listed: IT, autos, banking and finance, NBFC, that is, and of course, select few name in metal, cement, and pharma universe. Take care, stay safe, go by COVID appropriate behavior. Thank you very much for your patience hearing, and I'll see you again next week. Thank you and bye bye.